Hey, good morning, everyone. This is Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night. Yet this one is coming out the morning of the market open. Had a lot of software issues with my recording software last night, so had to reinstall everything. Hence why this video is just a little bit delayed. But nevertheless, we're going to go over all the trades from yesterday, this morning, before the market opened. The market is not open yet. It's about 6:30 in the morning, so you can see I'm up early trying to get this video out to you guys for sure. Now, today we had a lot of activity and probably one of our most active days in the last couple weeks. And it's just because we're starting to get closer towards the end of May expiration. So only about 7 or 8 days to go in May expiration. And what that means is that we have to start getting rid of some of the trades that were not profitable during the month. So if you remember, and for those of you who follow along in our videos over the last couple of years and the last couple of months, what we try to do is we try to only close out trades that are profitable all the way through the month. And we've been very successful in doing that this month in just closing out profitable trades all through the month of, or expiration cycle of May. So pretty much every day we've had at least a closing trade and we've banked some profits all the way. Now at the end of the month, now we have a lot more trades that haven't been winners that we're just trying to kind of hold on till the end and see if they turn around, see if the market turns. But some of these now are clearly not going to be winners, and we can't roll them, which I will go over tonight as well about what a good looking roll is, because we did one on INTC, which is Intel, and then some other ones that just doesn't make sense to roll them because they're so far out of the money or just not profitable, whatever the case is. But at the end of the month, you want to start getting rid of these positions because you want to keep adding for June. So taking off the front month options and start adding back month options as you go forward. So tonight we're actually going to start with the closing trades because we had quite a number of them to go over with you guys tonight. And the first one I want to start with is Priceline. Now Priceline had earnings and we only were in this trade for 1 day. So we sold an Iron Condor yesterday for Priceline before it had earnings. Priceline actually had decent earnings but bad guidance. Whatever the case is, I'll show you guys the chart here in a second. And we ended up legging out of this trade in two different spreads. So the same way we got into the trade by legging into it, we also legged out of the Iron Condor as well. It's just really hard to get kind of really good pricing in Iron Condors if you try to do it all one together. So we actually ended up buying back the 1070 1065 put spread almost right after the open, and just looking back, we could have actually saved some money here, but who knows if Priceline would have continued down after the open. We didn't really expect Priceline to rally all the way back up and then some after the open. And then towards the end of the day, when Priceline fell back away after its kind of mini rally during the middle of the day, we actually bought back the 1180 1185 call spread. So the combination of those two is we bought it back for a total debit of 105. Most of that was paid in the 1070 1065 put spread that we bought back, but overall we made about 120 bucks just for 1 day's worth of risk. So not too bad. I'll take that trade any day of the week. If we go to Priceline, you can see what I'm talking about here with, oops, excuse me, my cursor wasn't working. You go to Priceline, you can see what I'm talking about here, that the stock actually opened up lower. So it opened up all the way down here around 1100, and then during the morning rallied all the way back up to about 1160. So it actually even almost tested our call side trade. So had we been a little bit more nimble, we could have actually closed this thing out on the put side for a bigger profit. But at the same time, who knows where Priceline could have gone. It could have opened lower and continued lower right against our strikes. You can see how close our strike was on the bottom side at 1170. It was just below here, or 1180. It was just below here. So we want to make sure we got out of that spread completely. But at the end of the day, we had a really, really good move in Priceline and a nice profit. All right, so a couple losers that we closed out. Facebook was one of them. We had a debit call spread in Facebook, the 62.5, 65 call spread that we closed out for a 15-cent credit. So it was a 103 loss on this one, fairly decent size loss, but we kept the position size small. Really, at the end of the day, Facebook is one of those ones that seemed like it could rally. It was going to give us great positive delta in our portfolio, but really just didn't catch steam with the rest of the market. And a lot of these internet stocks and kind of IT or tech stocks really didn't have a good week in the last couple of weeks. So that really helped or hurt our position. You can see that we're definitely still within the range, but we really need Facebook to rally up above 62.5. So it's got to get up here by expiration, and you can see that's pretty range bound. So I'd have a tough time believing Facebook is going to make that move. So we got rid of the position and expecting to at least get some premium out of the position, whatever's left in there. We don't want to take a full loss at this point with expiration coming up. Same thing with LinkedIn. LinkedIn, we had originally sold the 155, 150 put spread, and we bought that back today for a loss at 305. Now, because the width of the strikes is $5, this spread can actually go to a price of $5. So we saved technically about $160 by actually buying this spread back now. LinkedIn is another one of those stocks that had earnings, continued to move lower. We thought that earnings might have been good in LinkedIn as it moved through the month, but it continues to try to rally above, and you can see even yesterday the stock really tried to rally above 155 and then got pushed all the way back down and now starting to close lower. So I don't think this thing is going to go anywhere. Implied volatility is already starting to dry up, so that means our premium is starting to decay a lot faster, but because we're in the money, that's working against us now. So we needed really LinkedIn to close kind of above this level. This is a great example of a trade that you just can't roll. You'd be rolling this trade for a debit. So we've looked at rolling this trade numerous times, actually moving our strikes from May to June expiration, so rolling it out to the next contract month, and you just every single time roll it for a debit. Those contracts in June are trading at a really high premium compared to May already, so you don't want to pay to roll because you're basically reducing your risk anyway, or you're reducing your profit potential anyway. And by paying to do it, you're actually decreasing your probability of success. So in this case, it's 100% better just to close out the position. And if you want to get into a June option, to reset your strikes and then sell those options accordingly. The other trade that we closed out today is Visa. Visa is a call spread that we had. We had sold the 205, 210 call spread. And Visa is one of those ones that actually kind of bucked the trend here today and actually continued higher against the market with everything else trading lower. So we bought back our spread at a 330 debit, so a 207 loss on Visa. The 205, 210 call spread in Visa actually was working out fairly nice. In Visa, we had a good implied volatility drop, and you can see implied volatility is practically at 0 for Visa right now, so that was a big check. But what we didn't have working in our favor was the market. The market just continued to move straight against us in Visa, even though we had a huge gap after earnings. So just goes to show you, even if the stock gaps down after earnings, look at this. Right after earnings, the stock continued to move up every single day right against bad earnings. So you never really know what's going to happen with these stocks. All you can do is trade small, right? Keep your position size small and just continue to make smart decisions. All right, so let's talk about Tesla. So Tesla is another one that had earnings on Thursday last week, or Thursday yesterday. Tesla's earnings, not too good. This company actually made a decent profit, but had a lot of expenses, a lot of expenditures. So who knows what's going to happen with Tesla. I thought earnings were going to be good. We had a 210, 215 call spread that we originally bought in Tesla, and one that was semi in the money a couple times last week, but no significant profit to take it off. So we just kind of kept this thing on and added that positive delta to our portfolio. But we ended up having to buy this thing back, or sell it back for a 35-cent credit, so save about $60 to $70 on selling it back. But Tesla just really dropped like a rock after earnings and really never recovered during the day. Tried to let me get this thing here going. Tried to recover during the day just like everything else, but just really found no footing to move higher. So you can see Tesla opened up around 180, tried to rally up towards the market open yesterday, but then fell all the way back down at the end of the day. So it was pretty clear that this thing isn't going to move back up to the 205, 210 region, which is where we need it to move in the next 8 days. So at this point, we did get a nice drop in implied volatility. On the earnings move, we weren't playing that drop in implied volatility because we had a debit spread, but it just goes to show you that Tesla was up in the high 40s or 50s in implied volatility before earnings, and you can see one day after IV has dropped down to 2. So it is a pretty substantial drop in IV right after earnings. All right, and the last trade that we want to go over as a closing trade actually pairs well with our opening trade from the other day. So let me just actually adjust this up here a little bit. Hopefully you guys can see both of these trades on your chart. This is really an oops by Kirk, and I want to talk about this because it's really a classic example of just taking 2 extra seconds, and I'm ticked at myself for not entering the right spread here for Oracle. But these trades, we actually opened an Oracle butterfly in the morning, and then someone emailed me and said, Kirk, are you sure you wanted to open an Oracle butterfly for May? It only has 8 days to go. And no, I did not want to open it for May, but I was rushing through my orders, trying to get a lot of contracts in. Obviously, very active on Thursday, so I had so many things trading that I just didn't even see it. So I entered the front month options versus the back month options. So in that case, the best thing you can always do if you make a mistake is close out the position right away. And you can see that we opened it for a $30 credit, bought it right away back for a $32 debit, and lost $2 on it. So at the end of the day, it was a stupid decision on my part. I should have taken the extra 2 minutes to make sure that my order was right, to really look at it in the Analyze tab, but I didn't. And so it's just a really good lesson for all of you to make sure that you just take the extra time to make sure you're trading the right contract month, the right strikes, calls versus puts, whatever the case is, because it makes all the difference. And in this case, we were lucky. We only lost $2 on it, so about $10 total on the trading commissions. So it really wasn't a huge loss on this in this case, but it was a big lesson to just take a little extra time in entering your orders. All right, so let's move up to the opening trades that we had for today. So there was a lot of good stuff in the market to trade, and I want to go over that. And namely, EWW and Verizon were two really interesting trades. So EWW and Verizon are both debit put spreads, both that we entered at almost mid-price on these. So you can see EWW was the 68.66 put spread that we entered for a little over mid-price of 109. And Verizon was 49.48 put spread that we entered for a little bit under the mid price at 47. Now, with both of these, because I want to go over both of these right now, both of them are nothing more than directional bets. Verizon I want to start out with because Verizon's had practically 9 days straight of up moves. So you can see it's got all of these days since it had earnings of just straight move up, no tick down. So no down tick at all in this Verizon move. And it's gone almost parabolic. And so at that point, all we have to do is say, you know what? I think that there's going to be at least one down move coming soon, right? And that's the move that we're playing. So we're up a little bit in this stock already because we sold it, or we bought the spread at kind of the top of the market yesterday, which was just a lucky bet. But notice that implied volatility is 0%. So the only thing you can do is trade calendars or ratio spreads or debit spreads. You don't want to be selling anything in this stock right now because implied volatility is at the lowest it could possibly be. We did look at doing a calendar around 70.47 on that, but the pricing was just a little bit too far out. That's a pretty huge move for us to make a calendars trade. So Verizon would have to actually come all the way down and kind of settle around 47 by expiration, which is actually a fairly big move for the stock. So we don't think it's going to make that big of a move considering how strong it is right now. But we do think that the stock at least has room for a couple downticks in the next couple days, given just that some people are going to start taking profits on this move. So that's the reason that we got into Verizon. For EWW, you'll notice that it's almost the same thing, except yesterday actually ended up being a downtick. So when we actually entered this trade yesterday, we did not have a red day, and it was actually a green day. So EWW was trading higher on the day, and same thing, just a lot of uptick, a lot of consistent momentum higher. And you can see, you just go back in past in history and just take a look at this stock and say, you know what, this stock really doesn't have 8 or 9 days consistently of gains. And so we're just playing the odds that at some point this thing is going to roll over, and it's already starting to do that now. So if we get a nice little move down today, we'll definitely close out this one, definitely close out Verizon. These are going to be quick trades, just kind of scalping the market here a little bit. So not trades that we're going to hold all the way to expiration. For Yelp, we got into Yelp yesterday because we needed some more premium on the selling side for June expiration. So we went ahead and sold the 50-45 credit put spread for a 160 credit in Yelp. Now Yelp has had a really tough time over the last month or so, along with a lot of the other internet stocks and tech stocks going forward. But we do see some bottoming action here at Yelp. It's already past earnings for Yelp. You can see that earnings have already come and gone. So at least at this point, we don't have any earnings risk. But implied volatility still remains really, really high. So that's kind of a rarity that we had good earnings that have come and gone, and now implied volatility is high. So we want to take advantage of that. We sold the 45-40, I believe. I'm sorry, the 50-45 credit put spread. So we do want the stock to continue higher from here, and we definitely want implied volatility to go down and drop, which I think it will as we continue throughout the month. Implied volatility won't stay high that far after earnings until we get into the next earnings cycle. All right, and then the last trade that we want to talk about tonight, because we already covered the Oracle trade with the open and close, is the INT roll that we did in Intel. So what we did is we had a current 26-27 call spread in Intel for May expiration. Now, May expiration is obviously coming up very quickly. This was actually one of the rare ones that if you rolled it to June, so we actually rolled our same strikes and same position to the June expiration month, that it cost us nothing to do this. So why would we do this trade? Why not just wait till expiration or close out the trade, whatever the case is? And the reason that we would roll it, and we actually try to roll it for a credit, but ended up paying no premium at all, which is just fine to me as well, is that we get the extra time to be right. So right now, Intel is virtually right around our 26 short strike, and it could go either way at expiration. And what we don't want to have is we don't want to have this lottery bet coming up to expiration where the stock trades 1 penny above or below our strike, and that's the difference between making money or losing money on this trade. So we roll the trade to June expiration for no money, or possibly a credit if you can do it. Then that gives us that extra time to be right and let the position continue to work. So we still like Intel for June, and by rolling it out to June expiration with the 26 and 27 call spread, we still like the negative aspect of this trade, so continuing to move lower in the stock. You can see what's really interesting about this is that implied volatility is 0, yet we were able to roll it for exactly the same price. So I typically like to see implied volatility stay high on the roll, but I think that the reason that we got no credit whatsoever on our roll is because implied volatility is down to 0. But we still want to have that 26-27 call spread that we had in Intel before, and we still want to hold that position through next month. So it gives us more time to be right, gives us more time for the stock to drop or do whatever the case is, gives us an opportunity to make money versus making a big gamble here near expiration. So I know this was a long video. Sorry it was out late, but it is about 6:50 in the morning now, so I am trying to get this video out to you guys before the market open. Should have a pretty active day here on Friday, continuing to close out things, enter new trades, and hopefully we see some good moves in the market. As always, if you guys have any questions at all, please add them right below, and I'll get back to all of those today before the open if you can get your questions in, and happy trading.